Hi, I'm Barry Dowsett. I'm the CEO of Mirror Associates. Now, the purpose of this video is to give you a summary of the R&D tax changes that were announced in Jeremy Hunt's autumn statement. Now, the government have issued a technical note on this, and what we've done is we've put the link to that, the URL, in the video description below. But the purpose here is to save you time and therefore give you a quick summary of the key changes. So let's just have a look at those. The first thing to say is these changes are going to be from the counting period starting on or after the 1st of April 2024. Now, for some time we've been talking about merging the two schemes. So in effect, what's going to happen is the SME scheme will be merged into what's known as the RDEC scheme, which is actually has been reserved for large companies. Now, that does mean that SMEs will no longer have to deduct grant income, which is used to subsidise expenses. But under the RDEC scheme, that was not required. So that's a positive. So SMEs no longer need to deduct subsidised expenses, i.e. grant income. That's fantastic. There's also going to be a R&D intensive SME scheme. Now, to be in that scheme, they originally said that 40% or more of your qualifying R&D expenditure compared to your total expenditure had to 40% or more in order to be an intensive SME scheme. They've now moved that down to 30%. So the intensity level has reduced from 40% down to 30%. And the SME scheme will still get the enhanced additional relief. It will be at 130%. And it's a 10% tax credit payable. Now, let's not forget the new rules of this merged scheme, and that is you're not going to be able to claim R&D activities performed overseas. They were going to introduce that on the 1st of April this year, but that was delayed whilst they go under consultation for a merged scheme. So effective from the 1st of April 2024, you will not be able to claim for activities performed overseas. Now, this is the interesting part. There's new rules around who can claim for contracted out R&D activities. I'm really pleased to see that they've actually put some rules in place about this because it was a little bit confusing and there were claims being made by subcontractors which ultimately, in my opinion, should not have been allowed. So it's going to run through that with you. So this is all about who is going to be able to claim R&D tax. Is it the company or is it the contractor? HM Revenue and Customs have said they want those that are undertaking qualifying R&D activities to be able to make the claim for tax relief. They want to also avoid double claims, i.e. double dipping. So this is what they've come up with. So in a situation where a company project qualifies for R&D tax, and they contract out some of the work, what they're saying is the company can make the claim for R&D tax relief, the contractor cannot. Okay, so the key here is that the project qualifies for R&D tax at the company level. They can make the claim. That's the first thing. The second thing, if the company project doesn't qualify for R&D tax, although the subcontractor's work does qualify, the contractor can make a claim for R&D tax relief. And finally, what they've said is if a subcontractor is working on eligible activities for a non-UK corporation taxpayer, i.e. an overseas company, that contractor can make a claim. Now, the overseas business, for example, may possibly be able to make a claim in their own jurisdiction. That's why it says possibly there. But the key here is that a UK contractor, providing they're undertaking activities in the UK, they will be able to make a R&D tax claim, providing their activities qualify for the purpose of R&D tax legislation. Now, I'm hoping that is helpful. As I said, it's a quick summary. And once again, if you have any questions, please leave a comment, or you can reach out. Have a look at our website. You can reach out to me to ask any questions. Thank you very much for listening.